Hi guys, my name is Miracle, and I'm a full-time forex trader. So guys, I just want to show what I'm seeing on GBPUSD for the week. So I'm going to dive straight into the analysis. So pay close attention and see what I'm looking at. So maybe you may also catch some moves which might be coming this week. Okay, so guys, you can see that the market has been in the downtrend for the past weeks. You can see that the market was coming in this downtrend in a correction form. So the market is more of correcting. So we can observe that, and we saw the market coming and breaking our downward trend line and coming back to retest it over here. So having seen that, now we can also see that the market started pushing upward, started coming upward, forming a 1, 2, 3 move, which confirmed our uptrend after the break of this trend line, confirming to us that the market uh, is now going up. So now guys, how can we catch our entries? Because now we can see that the market broke the downward trend. Now it's going up, and since we are trading, this is more of a correction. So we know that once the market breaks a correction, it goes to its 90% rule, which would be on this point over here. Okay, so having known that, we know that okay, the market broke our downward trend, and now it has formed a 1, 2, 3 heading upwards. Now how can we capitalize on this move? So guys, now there are about two methods in which we can capitalize on this move. The one method which we might use would be seeing what the market does after it comes on this resistance or on this support. Let us call it a support, because we know that when the market is going up, it comes back to the test on our support and goes further up. And when it's in a downtrend, it comes to our resistance. That's where it will turn from. So now in this case, we are aiming for buys. So now we are saying that let us see what the market does when it comes to this support. So now if the market comes on this support and forms a reversal pattern or a reversal candlestick, which can be a bullish pin bar or engulfing candle. And guys, bear in mind that I'm on my H1 time frame. That's where I analyze, and that's where I catch my entries from. So sticking to one time frame only. I don't really believe in having more than one time frame, because uh, I feel that it just causes confusion when you're looking at main time frame. So for me, I stick to one time frame, and for me, which works best is the H1 time frame. So now let's see, guys, what happens when the market comes to this zone. We would have said, looking at this previous resistor, which was here, when we zoom in, just a minute. If we are to zoom in and see what the market did here, on that support, let us zoom in and see. So if we zoom in, we can see that okay, quite right. We had this support, which was printed by the market. Okay, so this was a good support. So now, guys, there are what we call market structure. How the market comes into our zone. It is one of the things that is most important. So guys can say, okay, how the market approached this our zone. It came with an impulse, if you can say that this is more of an impulse. So now it would be not wise for us to enter here for a buy. because we can see that okay, quite right, we are on a level, on a previous level, which is strong. But now the way the market is approaching this zone, it is more of an impulse. And for us to enter our trades, we want to see that there is a more of a correction coming into our zone. Because guys, remember that what's important is how the market reaches our zone. How does it enter into our zone? So we want to see the market coming in with a correction, with something like this. We want to see something like this coming in into our zone, so that we can buy now here and take it up. Now, in this case, the market is coming in this zone with an impulse. So for me, I don't like entering in such trades over here like this. But this is our flip zone. In fact, okay, this was our previous high because the market came. Let me just show you something. The market came like this. The market came and did this 1, 2, 3. So now we're seeing that the market is back on our higher high. So this is our previous high. Now we won't consider this level for now because the market came in with an impulse, but only if the market prints something like a double bottom over here, then I can say to be safe for us to buy. But if it does not print this double bottom over here, we will not look for any buy setups over here, but we wait for the market to come to this trend line over here, this trend line over here, this point over here. That's where it will be more wise to enter for a buy, because now we've said okay to be first touch, second touch, third touch. Why am I saying that we are going to use the trend line and not this support? Because most of the time, okay, I've spent more time trading and I've seen how the market moves. Each turning over here would be more of a trap. The market might come, push a little bit, but then come down, come and fill other orders, which will be down here. So I think the safest way for us is to wait for setups which will be on this trend line over here. Okay, so now having said that, now I'm saying that how are we going to enter the trade? So why am I saying that on this we can use candlestick confirmations? Because I've seen that in the previous data, the market came here with no pattern, came here bounced with a candlestick. If you can see, guys, this was a candlestick which it used. We can see the bullish pin bar over there, which pushed the market upwards. So now I'm saying that if the market comes down here and again prints a bullish pin bar, it might go up. So guys, that's it for this video. So let's wait for the market to open. Since today being a Sunday, let's wait for the market to open. Let's wait for it to come on this zone. After it comes to this zone, let us wait for it to print a reversal candlestick. It can be an engulfing candle, a bullish pin bar. Then we can execute our trades by entering over there and putting our stop loss just below this trend line, just below the trend line, something over there. Then we'll aim for the 90% true, because we know that okay, the market is still going up. And furthermore, we can also see that okay, we also have our trend line over there, confirming it to say okay, confirming it to say that if the market has to bounce over here, we can see it's coming over here, which will also complete our 90%. Okay guys, so this This is all for this video. Like and